Welcome back to the Crypto Report, everybody. I'm Crypto Kip. Today we're going to be talking about the Bitcoin price. And yes, we did have a falling Bitcoin here over the last 48 hours as some crypto banks have collapsed. And we have touched down to a key resistance at the $20,000 Bitcoin level, slightly below at a $19,500 level. We have so far held that support, but we're going to take a peek at that. Talk about whether or not I think we can continue to hold that or if we are going to experience some downside. We'll talk about some recent data that came out regarding jobs in America and some upcoming data that you need to look at regarding CPI here in the US as well, which investors are going to want to look out for next week. So let's talk a little bit about it, guys. Let's get into the content. If you like this video, smash up the like button, subscribe to the channel. It helps a lot in the YouTube algorithm, guys, if you do hit that like. And we're giving away $1,000 worth of Bitcoin at 10,000 subscribers on the channel. So make sure you subscribe right now and check that out, guys. Let's get into these charts. Let's see what's going on in these markets. Down to a $934 billion market cap. Now, some people are saying, hey, there's a chance we could get down to a $500 billion market cap. Is that possible? Guys, nothing's impossible here in crypto. You know, it's not going to go to zero. Nothing's impossible. However, I do think that's highly unlikely. Bitcoin is, after all, an escape from inflation, really, when you think about it. And some of this inflation fear is kind of driving these markets down alongside some of these crypto banks that are collapsing. But I don't expect to go down there. Is it possible? It could be, guys. But right now, we are holding on to the resistances we need to because Bitcoin's at $19,934 today. Ethereum is at $1,400, which is okay. You know, over the last 7 days, Bitcoin is, of course, down 11%, and so is Ethereum. But let's look at this crypto market cap chart a little bit here, guys. So we talk a lot about this on the channel. We expected a bounce off the $1 trillion level for crypto, and we broke quite a bit below it, and seems like we're trying to get back to that $1 trillion level. We'll have to keep an eye on that right now, but we have broken down pretty significantly below it. Nothing crazy. If you zoom out, shouldn't be a need for fear, right? If you're panicking right now, panic is not the answer, guys. Panic is never the answer in crypto. When you panic trade, you're not making a good trade typically. That's typically not how it works, okay? If you panicked at the bottom of the FTX collapse, then you missed some recovery, right? We're still above the FTX collapse bottom, so that's something to keep in mind. Also, if you do look at it, back in 2018 and 2017, during that previous bull market a couple years ago, we actually did hit a $20,000 peak and kind of came back down, had a bear market. Then we went up to $69,000 for Bitcoin and then came back down into a bear market. And now here we are, and we're testing that 2017, 2018 bull market peak, which is very, very interesting to see. Now, we broke slightly below it, but nothing crazy here. So if we can see a weekly candle close below 19,500, which we haven't even wicked down below that yet, then we might expect a little bit more downside. But I don't expect us to do that quite yet. It is certainly possible, guys. It's certainly possible. But we're going to call it as we see it. And right now, we're not quite there. But here is a couple things that you got to keep in mind. One, Bitcoin bounced a little bit today, which is interesting considering the U.S. added 311,000 jobs in February. Well, Crypto Kip, isn't that a good thing? Actually, it's not a very good thing in a very bizarre way. Now, it's a fantastic thing for the people getting those jobs, and it's fantastic to see that people are making money and working. These are all good things for the economy. But for investors, this is not quite a good thing. Why? Because the Fed is looking at jobs, and as the jobs market remains strong, that does mean that the Fed, Federal Chair Jerome Powell, will likely need to raise the interest rates up to 0.5%, because frankly, what the Fed needs to see is the economy have a little bit more pain so that the prices can go down, because we need to see unemployment up, which means consumers can spend less money, which means that people in stores and people that are providing products on the shelves need to put the prices back down. That is how they intend to fight inflation. So, a strong jobs report is actually bad news for investors, guys. Do not be fooled. But we do need to watch the CPI data, the Consumer Price Index, which will tell us what the prices of some of these products actually are out there. And this, guys, in case you didn't know, it is coming out on March 14th. This is coming next week. So be on the lookout at 8:30 a.m. March 14th, guys. The data for February is coming out, and this is what investors need to look at, because if this comes out and inflation is not getting any better and the CPI data kind of doubles down the Fed's thoughts on where we're at with inflation, where, you know, they've been battling inflation a little bit. It's coming down, but not quite fast enough, right? The jobs are very strong, which the Fed doesn't see as a good thing. And if the CPI data is not coming down and it still remains high, then the Fed is likely to do a 0.5% interest rate hike, which is bad for markets, because that will mean that, hey, the S&P 500 is probably going to continue to go down. And if that happens, unfortunately, Bitcoin's going to go down. But, you know, that doesn't really make sense when you think about what Bitcoin is. It's really your way of escaping the dollar and escaping the game that is the inflationary aspect of the dollar. That being said, it still has not diverged from the S&P 500 in the traditional market. So Bitcoin's still playing the game of the traditional market and watching the moves of the Fed. That being said, there are a lot of liquidations that have happened on account of some of these recent crypto banks that have failed. Silvergate. You also do have Silicon Valley Bank, I believe it is, out in California, which is a large bank, and I think they only bank people that have $100,000 or more. But these two banks are closing down. They're shutting down. They're failing right now. And this is on account of really their connection to crypto, which is kind of interesting. So this is what's really causing the crypto markets to go down and causing all these liquidations, because people were expecting, us included on the channel, you know, hey, we were feeling good. We were hoping to get a break above $25,000. Of course, we always said there's room for more downside, but hey, these liquidations came into the picture and we're seeing some downside. Now, on a positive note, if you want to call it that, there have been some extra shorts. $60 million in shorts were liquidated and squeezed today, which is why we saw a little bit of a bounce back up towards that $20,000 level for Bitcoin, which was good to see. But we'll have to keep an eye on it and see if we can kind of hang on to that $20,000 level. That being said, guys, if you zoom out and you really think about what we're doing here, we talked about it on our live stream. I frankly don't really care if Bitcoin does break down below $19,500 on the weekly candle and the CPI data is coming out and the Fed needs to raise those rates by 0.5, and we do need to kind of continue doing this fight against inflation a little longer than expected. Really, all that does for me is, in my mind, give us a longer runway to have an excellent buying opportunity on this generational wealth building tool that is cryptocurrency and Bitcoin, folks. So these are some of the things that we're thinking about today here as we're watching these stories unfold and as we're watching these crypto markets move in the way that they have, which have been, admittedly, guys, quite volatile indeed. But hey, volatility can be good for traders. It can also be dangerous. So be careful out there, guys. That's just the quick Bitcoin update for you guys today. Just know that we're giving away a loaded line at 25,000 subscribers on this channel. So follow us at _crypto report on Twitter for the details to this giveaway. And if you're a member on the channel, you get an additional 10 entries for every single month you're a member. So come to the channel. Consider joining as a member. If you do join, you get access to our private Discord where you can talk directly with Maxi, my partner, and myself about some of the trades we're doing, some of the NFTs that we're looking at. And if you become a member, you get loyalty badges next to your name in the comments and during the live chat, along with these custom emojis during our live streams every Tuesday, Thursday at 5:30 p.m. Central Standard Time. Folks, that is all I got today. I am Crypto Kip. This is the Crypto Report. Don't forget to smash up the like button, guys. It really helps out the channel, really helps out crypto by getting the crypto influencers out into the YouTube algorithm. And subscribe, guys. That is all we got on Crypto Kip. Don't forget to DCA, HODL, and we'll see you in the next one. Thanks, everybody. Got 2 videos for you here if you want to check them out. Peace.